Hey, everybody, and welcome back. We're diving deep into crypto today,
Yeah.
but with an Indian twist. You're probably here because you've heard the crypto buzz, right?
Yeah, definitely a lot of buzz.
Yeah, but maybe not sure where India fits in. Which, I mean, is it a gold mine, a gamble,
hmm
something in between? Well, settle in because we're breaking it all down.
That's right. We'll be using a fantastic article from FinShots. It's called FinShots Cracks Crypto #6, a simple guide to crypto trading, investing, and taxes in India. It was published pretty recently, February 21st, 2025.
Perfect timing for this deep dive then. So if you're even thinking about dipping your toes into crypto in India, this is for you. And hey, if you like what you hear, don't forget to hit that like button, leave a comment, and subscribe to our channel for more deep dives. And tell a friend. Okay, let's jump in. First things first, is crypto even legal in India?
Great question. And that's where things get interesting. The article explains that crypto kind of exists in this legal gray area in India. It's not illegal, but it's not officially recognized as, money either.
So it's not like using rupees or dollars.
Yeah. Right. Exactly. Instead, India has classified crypto as a virtual digital asset, or VDA.
Okay, a VDA. So you can own it and trade it, but I'm guessing the taxman's going to want to cut.
Oh, absolutely.
Mhm.
It's treated more like an asset similar to property or stocks, meaning, yeah, you'll be paying taxes on any gains you make.
The article actually calls taxes the silent killer of crypto profits in India. Kind of scary. But here's what really surprised me. Even with all the regulations, all the tax stuff, India is apparently one of the leading countries adopting crypto.
It's pretty fascinating, right? Despite the hurdles, people in India are really embracing the potential of crypto. It's a huge market. There's a ton of enthusiasm.
So let's say someone's listening, they're intrigued, and they're like, okay, how do I actually get started with crypto in India?
Yeah.
What are the steps involved?
Well, you know how if you want to invest in the stock market, you'd go to a stockbroker?
Yeah,
In the crypto world, the equivalent is a crypto exchange.
makes sense. The article lays out 4 key steps to get going. First step, choosing an exchange. Sounds important.
It's crucial. Security should be your top priority. The article really emphasizes looking for exchanges with, strong security measures, two-factor authentication, withdrawal whitelists, proof of reserves, basically making sure your crypto is safe from hackers and, any shady business.
Yeah, you definitely don't want to lose your crypto to some digital thief.
Yeah,
What else should we be thinking about when picking an exchange?
good question. The article also talks about high trading volume. Having more trading volume generally means better pricing and liquidity, so you'll be able to buy and sell your crypto more easily.
Got it. So we found a secure, reputable exchange. What's next?
Step 2 is funding your account. You've got a few options for this. Things like UPI, bank transfers.
Yeah.
You could even use stablecoins like USDT for faster transactions.
Hold on, USDT. What exactly are stablecoins? I feel like I've heard that term, but...
So think of stablecoins as like a bridge between regular money, what we call fiat currency, and the world of crypto. They're pegged to the value of something stable, like the US dollar, so their value doesn't jump around as much as other cryptocurrencies. Makes them useful for quick transactions, and it kind of helps smooth out that volatility you often see with crypto.
Okay, that makes sense. So we've got our exchange, our account is funded, ready to dive in. What's next?
It's time to make your first crypto transaction. This is where you actually buy the crypto you want, like Bitcoin or Ethereum.
And this is where I get a little confused. The article mentions these things called trading pairs. What are those?
It's just how cryptos are traded on exchanges. For example, if you see a trading pair listed as BTC USDT, that means you're buying Bitcoin and using USDT as your currency.
Got it. So any other words of wisdom for someone about to buy crypto for the first time?
Absolutely. Do your research. Before you jump into any trade, understand the liquidity, the volatility, the overall credibility of the coin you're interested in.
Don't just blindly follow the hype.
Exactly. And remember, you don't have to go all in right away. Start small, get a feel for the market, and gradually increase your investment as you, gain experience and confidence.
All great advice. Okay, so we've bought our crypto. What do we do with it then? We don't just leave it sitting on the exchange, right?
You're absolutely right. Step 4, and this is critical, move your crypto to a secure wallet.
This might sound silly, but why is that so important? Isn't it safe on the exchange where we bought it?
Well, exchanges are often targets for hackers, and there's always the risk of, an exchange going bankrupt or even freezing withdrawals. If you like what you are hearing so far, be sure to hit that subscribe button and the bell icon so that you're notified every time we release a new episode.
So it's like leaving your money in a bank that might suddenly disappear.
Good analogy. And that brings us to the golden rule of crypto. Not your keys, not your coins. If you don't control the private keys to your crypto wallet, you don't truly own your crypto.
Okay, so we need a wallet. Are we talking about those cold storage wallets I've heard about?
Ideally, yes. Cold wallets, also known as hardware wallets, they're like Fort Knox for your crypto. Offline and generally much harder to hack. The best option for long-term, secure storage.
What about those hot wallets? I've heard that term too.
Those are software-based wallets. More convenient for frequent transactions, but they're also more vulnerable to security risks, because they're connected to the internet. If you have some other opinions on hot versus cold wallets, share those with us in the comments.
Choose your wallet wisely, based on your needs and risk tolerance.
Exactly. So you've got your crypto safely stored in a wallet. There are two main approaches you can take: trading and investing.
Okay, let's break those down. What's the difference between trading and investing in the crypto world?
So trading is all about trying to make quick profits by kind of riding the waves of market volatility. Traders are constantly buying low, selling high, taking advantage of those short-term price swings that crypto is famous for.
So it's like day trading, but with stocks, but on steroids.
Yeah, that's actually a pretty good way to put it. The crypto market's open 24/7. Things can change really fast.
Intense. So traders need to be basically glued to their screens.
Yeah.
Ready to react, like instantly. What kind of tools or strategies do they use to do that?
Well, technical analysis is a big one. Traders use charts, patterns, indicators, all that stuff to try to predict those future price movements. They also pay close attention to things like trading volume, momentum, market sentiment.
It sounds like a lot to keep track of.
Yeah.
What about investing? How's that different from trading?
Investing in crypto is more of a long-term game. It's about believing in the underlying technology and the potential of a particular crypto, to grow in value over time.
So investors are focused on the fundamentals, not just like those short-term price jumps.
Exactly. They're looking at things like, strong teams, innovative use cases, a solid track record for a project.
The article mentions something called dollar cost averaging, DCA. What's that about?
Oh, that's a popular strategy, especially for those long-term investors. So instead of trying to time the market perfectly, which is almost impossible, you invest a fixed amount of money at regular intervals, no matter what the price is.
So you might buy some Bitcoin when the price is high, some when it's low, and over time it just averages out.
Precisely. It really helps reduce the impact of that volatility and takes the emotion out of investing. If you're liking this conversation so far, be sure to give this video a like and share it with your friends.
Makes sense. But whether you're trading or investing, the article stresses the importance of risk management. And considering how volatile crypto can be, that sounds like crucial advice.
It's essential. No matter how much research you do, how confident you feel, there's always a chance things could go wrong. And that's why having a solid risk management plan is so key.
So what does a good risk management plan look like in the crypto world?
Well, for traders, it often involves things like using stop-loss orders.
Stop-loss orders, right. I've heard of those.
Basically, a stop-loss order automatically sells your crypto if the price drops to a certain level that you set. Helps to limit those potential losses if a trade goes against you.
So you're not up all night worrying that your entire investment's going to, vanish.
Exactly. Another important part of risk management, both for traders and investors, is position sizing.
Position sizing, what's that?
It's about how much of your capital you allocate to a certain trade or investment. The golden rule is, don't put all your eggs in one basket.
Diversify, diversify, diversify.
Exactly. Spread that risk across different cryptocurrencies. That way, if one investment takes a hit, it's not going to completely wipe you out.
That's solid advice for any investment, really.
Yeah.
Speaking of things that can take a bite out of your profits, let's talk about taxes. The article doesn't really paint a very pretty picture of crypto taxes in India.
Yeah, taxes are definitely something to keep in mind if you're considering crypto in India. Like we said, the government treats crypto as an asset, so that means you'll be paying taxes on any gains.
And those taxes aren't small, are they?
Not at all. Currently, it's a flat 30% tax on any profits you make from selling crypto. No deductions, no exemptions.
Ouch, that's a big chunk of change.
And it doesn't stop there. There's also a 1% TDS, tax deducted at source, on any transaction over $50,000.
So even when you're buying crypto, you're getting taxed.
That's right. It's a pretty complex system. The article recommends that Anyone who's serious about crypto in India should consult with a tax expert just to make sure they're doing everything correctly. Be sure to share your other opinions about taxes on crypto in the comments section.
Yeah, good advice. Nobody wants to run into trouble with the tax man. Now, let's talk about regulations. The crypto landscape in India seems to be constantly changing. Who's really calling the shots here?
Well, there are a few key players. You've got the Reserve Bank of India, the RBI. Naturally, they're concerned about financial stability and the potential impact of crypto on the Indian economy.
They were the ones who tried to ban banks from dealing with crypto exchanges back in 2018, right?
That's right. The Supreme Court eventually overturned it, but yeah, it definitely caused a lot of uncertainty in the market.
So where does the Indian government stand on crypto these days?
Well, the Ministry of Finance is responsible for setting tax policies and preventing money laundering, so they're definitely keeping a close eye on things.
And what about SEBI, the Securities and Exchange Board of India? What role do they play?
So while they don't directly regulate cryptocurrencies, they've been pushing for more oversight, especially when it comes to crypto-linked financial products. They're all about investor protection.
So it sounds like everyone's still figuring out how to handle this whole crypto thing.
It's a very dynamic situation. The article actually mentions the Cryptocurrency and Regulation of Official Digital Currency Bill, which was introduced back in 2021. It was supposed to restrict private cryptocurrencies, but at the same time pave the way for a central bank digital currency, a CBDC.
So India's own digital rupee.
Exactly. But as of February 2025, that bill still hadn't been passed. So there's a lot of uncertainty about how things will actually shake out.
Well, this has been a lot of information. We've covered legal gray areas, steps to get started, the ins and outs of trading and investing, the tax stuff, the regulatory landscape. It's a lot.
And we're not quite done yet, but this seems like a good place to take a pause. We'll be right back to wrap things up and give you some final thoughts to consider. Don't forget to subscribe to the channel so you don't miss the next part.
We're back for the last part of our crypto deep dive. If you're just joining us, make sure to check out parts 1 and 2. We covered so much about crypto in India.
We really went through it all. The legal status, getting started, trading versus investing, those crazy taxes, the whole regulatory landscape, which is always changing.
Yeah, a lot to unpack. But hopefully you're feeling a bit more informed, ready to navigate the world of crypto, right? And hey, before I forget, hit that like button and subscribe to the channel if you haven't already. We release new deep dives every single week, all sorts of cool topics.
Definitely. We love sharing this stuff. Knowledge, insights, the things that can help you make better decisions. And maybe spark some other opinions along the way. Which, speaking of, we actually have a question for you.
Okay, hit us.
So, the FinShots article, it ends with this really interesting question. What if the future of crypto isn't just about trading and making money?
Right.
What are the other ways this technology could change things, change the world?
That's a good one. We focused a lot on the financial side of things, but that underlying blockchain technology, it has the potential to, it could revolutionize so many parts of our lives.
Absolutely. It feels like we're barely scratching the surface.
Right.
Take decentralized finance, DeFi. People can lend, borrow, earn interest all without traditional banks. That's a huge deal for financial inclusion, access to capital, especially in developing countries.
And then there's NFTs. They're changing how we think about digital ownership, creativity. They're already shaking up the art world, but they've also got applications in gaming, music, even real estate.
Yeah, and don't forget about blockchain for things like supply chains.
Yeah.
Making those more transparent, more efficient. We could have more secure voting, better healthcare records, even new ways to manage identity and personal data.
It's crazy to think about all the possibilities. So yeah, it's important to understand the practical stuff, like buying and selling your crypto, managing it, all of that.
Yeah.
But it's also important to be curious and think about the bigger picture.
It's kind of like, remember the early days of the internet?
Yeah.
Nobody could have predicted how much that would change everything. Blockchain has that same potential, I think. It could disrupt entire industries and change the world in ways we can't even picture right now.
Absolutely. So if all this has you thinking about crypto and blockchain, keep digging, explore those different perspectives, and talk to people who have other opinions.
And if you're looking for a great place to have those conversations, be sure to check out our channel, The Other Opinion. We cover all kinds of interesting topics, always encouraging those different viewpoints, respectful debate. We promise you'll come away with something new to think about.
Couldn't have said it better myself. And of course, we want to hear from you. What are your thoughts on the future of crypto? Not just in India, but globally. What gets you excited? What worries you? Share your other opinions down in the comments.
And don't forget to give this video a thumbs up, subscribe to the channel for more deep dives. If you found this one helpful, share it with a friend.
Spread the knowledge. And before we sign off, just a quick note. This entire episode was powered by AI. We're always working hard to bring you the best content. But as with anything in the world of crypto, do your own research, double-check the information you find. It changes fast.
That's right. Stay informed, stay curious.
And until next time, happy exploring.